Hello, good afternoon. Today is Monday, February 28th. My name is Scott Forcino. I'm an associate broker with eXp Realty based out of New York City. I have today with me Rick Carlson from Nexa Mortgage. He has some information to share with us, his referral partners, and his local business community to help everyone make better and more informed decisions on where the mortgage market and lending real estate is. Good afternoon, Rick.
Good afternoon. Thanks so much for having me.
I'm happy you're here. So where are you from?
So I live in Coeur d'Alene, Idaho, which is about 90 miles from the Canadian border and just east of Spokane, Washington. So I'm in the skinny part of way north.
I see there. Okay. I think that's a great part of the country. So tell me about you and your background.
So I have been in real estate in some form or fashion for in excess of 20 years. I've been a licensed agent since 2002, and then I was on the private side of real estate for about 5 years prior to that. And I originated mortgages back before you had to have a license, and then they changed the law. So then I just focused on real estate, and then in late 17, I got my license again to practice, to originate mortgages. And so now I originally was on the retail side, and then I saw the light and came to the wholesale brokerage side, where we're able to directly represent our clients in their best interest versus a stock price.
I see. What does that mean? Can you explain the distinction between a stock price and the form of representation you offer?
Retail, basically in a nutshell, retail is, when I was on the retail side, I never once talked to an account executive with a lender. I never once talked to anybody above my actual manager or my area manager. So in what we had, we were very limited on what we could offer as far as different loan types, different products. So what I quickly realized after being in the business for a little while is I was limited on the number of people that I could help and serve. So I was looking for a different option that opened up my horizons, if you will. And through a few mentors that I have that have been in the business a long time, narrowed it down that the wholesale side was number one, the only place to be, and then number two, Nexa was the best place for me to be, based on the support and the love that they give us as loan officers, and then they afford us the opportunity to work with 140 plus lenders versus none. One or two or just a few. So 140 plus options as far as to where to place a loan. That's completely up to us. It affords me the ability to work directly for the borrower and shop their loan to the different lenders and really give them options as far as what works best for them.
So give me an example of someone who's, let's say, self-employed professional and have their own business. How can you help them secure financing? And maybe assist the agent.
Yeah, definitely. So, the biggest obstacle I see now, I'm self-employed as well. So, I have fallen in this category in the past where, we tend to make a lot of money at times. And then what happens is we got our earnings with deductions. So, and then, instead of making 150 or 200 or whatever you make a year, you make 40. And so you pay less taxes, but at the end of the day, it doesn't always help us. So, depending on how they're set up, there is a vast array of options for self-employed borrowers. We could go with like a stated income loan, or not necessarily a stated income loan, but like a bank statement loan. So depending on what they have to show us and how they can show us what their income is, then we can kind of steer them to the right lender that makes the best sense for them.
I see.
Sometimes it's more about getting it done than it is like the lowest rate.
So you're really acting on the borrower's behalf more so than representing the bank.
Oh, absolutely. Yeah. The wholesale, in the wholesale channel, we have some great partners that really make things easy for us. And so, obviously we want to work with wholesale lenders that make our jobs easier and make the client's, loan process smoother. And so as you go through this process, you figure out, who's good to work with and who's not. And And it does make all the difference in the world, because I'm able to actually represent the borrower's best interest and really get them. Sometimes it's not about the rate; it's about getting it done, because there's very few that can get it done, and being able to find those lenders that can get the deals done.
Right. And maybe explain to me, how would that help one of your agent referral partners to getting their offer accepted in a multiple bid situation?
So in that situation, what we're doing is, I know what I'm doing is, I reach out to the listing agent and have that conversation. I know in my local market, I like to think I have a great reputation for getting things done. And if you've done a transaction with me, you want to do another one. In most cases, there are those cases where I've been, representing the client's best interest, and so that, ruffled a little feathers on the other side. But I've been at this a long time, and I feel like I'm pretty good at the game. So it's about getting it done and getting the deal done, represent the client's best interest. So for myself, I'm calling that listing agent as the loan officer, and explaining to them what we have. Like, we've been through underwriting. We just need an address. Like, we're good to go. There is no red flags. This isn't a paper pre-approval where, we're going to get a ton of conditions. And I think that as we've moved into this very different climate within the mortgage world, having buyers that are that have already gone through the process. I don't even want to say pre-approved or pre-qualified.
Well, it sounds like they've been underwritten up to this. They've been underwritten at this point.
Absolutely. Let's get through the underwriting process. Essentially, I want to know what obstacles or slowdowns is gonna, I want to get that out of the way before we find an address, so that way the buyer's good to go. And then I can show that listing agent, hey, this is where the buyer's at. They are absolutely ready to perform based on their specific scenario. And and in a lot of times we can make that that loan process as good as cash. So in some situations, not every, but in some situations, we may be able to close that loan, in as little as 14 days. So it just kind of depends on, every situation is different. So I never like to make blanket promises that we can close every loan in 14 days, because let's just be honest, we can't do that. Not everything's going to be the same, but if you've got a very solid buyer that qualifies for the right products, we can get those closed very quickly and get those loans done, and make it a win for the buyer and the seller.
Well, it sounds like that's a real value that you offer to the agents, because it's, in a way, you're kind of vouching for their client in a way that they or the buyers can't.
Oh, absolutely. And the other big pro of working with a loan officer on the wholesale side of mortgage is, essentially, we've removed a lot of the layers that take place. So if there's an issue and I need to actually call the underwriter, I can call that underwriter and I can talk to them and work out the issues, or whatever may be the case. Things come up in the transactions. You've got a real estate transaction that is the most, the highest fiscal transaction most people will do in their lives. And I don't even remember how many aspects of the transaction, but we're talking, probably 20 or 30 different people that have something to do with that transaction to move that ball down the field.
Mm-hmm.
So as a wholesale loan officer, I'm able to remove a lot of those layers and basically just really expedite that process with a handful of people that's going to get that thing done. And then, if we're working with one of our platinum partners, they're going to, generally we hear back from underwriting same day in a lot of cases. So, I know on the retail side, I was waiting 24 to 48 hours for an answer a lot of times, and you're just stuck. What do you do?
Right. And then, I know you mentioned all the professionals that could be working together on a deal. I mean, on one side, I guess on the buyer side, there's, of course, the lender, the realtor, the home inspector, the title insurance, the homeowner's insurance, I guess, mover, there's even contractors. I mean, it does it. You're right. It affects a lot of people. Tell me how you work, I guess, with your referral partners, how you select your referral partners. What are you looking for, and what do you think you offer them?
So I'll start with what I offer them. So as being an agent for a long time, I've got an idea of like what to do and how to do it, if you will. I bring a different perspective to how to approach things and really getting everybody what they want. I tell clients and my agent partners, this, we're baking a cake, and we have to have the right amount of the right ingredients for it to taste good for everybody to want to eat it. And that's the only way we get this thing done. So how do we figure out what that recipe is, and how do we get it where it needs to be so everybody wants to move forward? And so on that note, I bring a different perspective, and I can help agents. I mean, when I started in the business as an agent in 2002, I would say the first like 3 years, a majority of the conversations were, first off, we were signing 12-month listing agreements. I would get like one showing every 2 months. And when I finally got an offer, it'd be like, congratulations, Mr. and Mrs. Seller. I finally got an offer on your house after, 6, 9, 12 months. And you only have to bring $6,000 to $20,000 to the closing table to get it.
Yeah, that's not today, boy, for sure. Wow.
Oh, no, absolutely not today. So I've seen so many different markets, and I've survived so many different markets, that I have a good perspective of what it's going to take to get these deals done. And really thinking outside the box. I mean, I think that a majority of the agents that have been in the business for the past, 5, maybe 8 years, they just have a very different understanding of what real estate is versus the reality of what it can be.
What it can be, sure. I mean, look at rates. I want to move to rates. My first place in New York had a 9.25 rate, and I was happy.
Oh yeah, my first house in 2002 was 6.5%. I had a $230,000 loan. My interest rate was 6.5%, and my monthly payment was $1,800 a month. Insane.
Some of the places around here are $1,800 a month in taxes.
Oh, absolutely, absolutely, and that's the that's the world we live in today. The governments are wanting in on the gold rush as well. So, it's a matter of making sure that you're looking at things like that, and that's something that as we move forward, and most states have a law where property taxes have to be assessed every 2 years, and so I think as we move into this new, what I would call a new market, you're going to see there's going to be some obstacles there for buyers. So it's going to be really important that they have a lower rate and they're working with somebody that can shop their loan, because they're going to have to compensate for some of these things, like and upper priced HOAs and higher priced taxes, property taxes. So thankfully I'm not in like New York or California, where it's just insane with some of what they pay.
Where do you see rates? I mean, rates were record lows in the not too recent past, and now, I mean, what do you see? What do you forecast? And how does that affect the buyer?
Yeah, definitely. So I think that, and this is something that I study pretty closely. I legitimately spend probably at least an hour to 1 to 3 hours a day on this. And I think, once again, that's something else that I bring to the table that most agents they don't have time to do this research. I make time, but it comes at a price. So, the thing to keep in mind is that I believe, and I have to look and see, I don't know exactly what we're at now, but, or today, like as of today, I've been getting alerts all day that, the market is moving. We've seen over 1.25% increase in the past 50 days, 60 days of rates.
Big
so
deal.
when you look at that, I mean, you're talking decrease in approval. The amount you can get approved for goes down. What was the number? Like for every half point, it's basically 0.25%. So a half point would be about a 0.5% reduction. So as opposed to paying 300, you're only getting approved for 320. And that can be the difference between the house you want and the house you have to settle for. So that's where, and as far as the direction I see rates going, we have a couple of different things happening in the month of March. Number one, and now this is all as of today. This could definitely change in the over the next 30 days, but right now, Fed is talking about raising the rate at least 0.5% on the 16th. And I know that before everybody starts yelling that the Fed rate has nothing to do with the mortgage-backed securities rates, while indirectly they do not, or why directly they do not, indirectly they do. And so everything trickles down. It all has to do with the market and kind of the climate and what this, that, and the other. So, and then the other thing you have happening this month is the government is going to no longer be buying mortgage-backed securities. So what most people don't realize is that the government has been buying upwards of $170 billion a month in mortgage-backed securities. They are okay with not making money, so to speak, or the amount of money the open market would make. So they have kept the rates where they are essentially by buying those mortgage-backed securities. The open market is going to want a higher rate of return than the government does. So as soon as they stop buying them, it's going to be up to the open market to buy them. And they're going to want a higher rate of return, which is then is going to push the rates up. So you have two factors coming into play at the same time. One within themselves is a pretty major factor. You put them together, and I think I posted on social media, it's probably about 3 weeks ago, that I foresaw the rates going over 5 in a year.
Wow.
And to be fair, I feel pretty confident we're going to hit that.
Wow. It's
We're
going to
already
change
on
a
our
lot.
way.
I mean, I know maybe you want to touch on briefly the debt to income ratios. I mean, how that might play without getting crazy about that. I mean, how does that affect? Does a rate such as we were at 3 and even 5, what does that do to someone's debt to income?
It just lowers your buying power essentially. I mean, you're talking, for every, let's just say every quarter point is about $40 a month in difference. And so when you back those numbers out the other way, once again, the average is, ideally you want to be below, 43, 44% on debt to income ratio. So if you're, the numbers it just all backs out. So your buying power just goes down significantly as rates go up.
I know there's always been in my market, or even my observation, there's a big disconnect between realtors' awareness of that, which you just mentioned. I'm not saying they don't know the rates, but how that necessarily impacts people. So, I mean, to me, the danger has always been people are making offers on outdated information. So, I mean, we're in that exact position right now. Offers that are made on this past weekend, I think are going to be fine. But as things really move, if someone's really on the cutting edge of those numbers with their credit score, I think that people are going to make some offers in houses that they can't buy.
Well, we're already experiencing that, where we're having to go back and requalify people that have already been pre-qualified. It's like when the rates go up, you're once again, your buying power goes down. So we need to make sure that we're an industry as a whole. We need to make sure we're giving the buyers the tools and the information that they need to go make offers that make sense.
Right. Listen, it's a domino. One thing I've always said, it's a domino effect. So some sellers that has a contract expecting a certain amount of money for their home, they're buying property, they're in a contract. It's a real domino where someone could break down in that chain and stop that train from moving. I mean, I think, and at this point, sellers should really be concerned.
Well, and here's you're absolutely right. And I will say to add to that, where they should be concerned is what I'm seeing a lot of buyers are making non-contingent offers, even though they have contingencies.
They have actual real contingency, but I mean, some agents are either counseling or miscounseling their clients to waive contingencies, and then we're looking at lawsuits or even worse, or even loss of down payments.
Well, yeah, I mean, I'm definitely, I've not heard personally of anybody losing earnest money due to lack of performance. That's not to say it's not an option and it's not going to happen, but I also do believe that, like, for the time being, if you're I mean, I saw an offer this morning that was contingent upon the purchase of the purchase was contingent upon a sale.
Is that something you
And
guys, is that something you do or is common in your area?
I want to say it's situational. I believe I not from what I'm seeing. I'm not seeing a lot of it, I should say. I would say that I'm really seeing a lot of non-contingent offers because, realistically in today, maybe this may not be true in 2 or 3 months, but today you can go make an offer that is non-contingent upon the sale of a home and comfortably sell that home.
Oh yeah, sure.
And so, but you may see the day that ship sails, and listen, as rates rise, at this point in time, we have the lowest inventory, I believe, in history. Based on the stats in my own market, we are at 0.002% available housing per the population. So
Wow.
what that means is there's 174,000 residents in one county I serve, and there's 330 listings available.
So it's negligible. It's not a drop in the bucket.
Absolutely. Yeah, you can't even. I mean, once again, like every Friday, most Fridays, if I'm in the office, most Fridays I look to see how many active listings. And in Spokane, Washington, last Friday there was about 440-ish. There was about 330 something in Coeur d'Alene, and then in the county just north of me. Now there's only about 49,000 people in that county, but they had 133 listings total.
Crazy.
Now keep that in mind that when you take that into perspective, not only do we have locals that are trying to move. And not even move, they're just trying to buy and come into the market. We have outsiders we have people moving here to buy for the first time. So you just have, and this is what I'm telling buyers right now. If you can buy, you should. And not because I want to see you like spend money and take on debt and all that. When you buy a home, you secure your future. You know what your house payment's going to be. You know what, you got an idea what your taxes are going to be. You've got the tax benefits of owning a home, and all that plays into the bigger picture. Not one person that's bought in the last 10 years is wishing they hadn't bought.
Right.
I mean, even the people that bought in 08 or like 07, 08, when it was at its peak, they've rebounded plus some, and they had a place to live that they were enjoying. They knew what their expenses were going to be.
Right. And it's much better. People, I saw an interesting post on social media. People are talking about the rates of 3 or 4 or 5. Well, when your rate is 100% when you rent.
Oh, absolutely.
You don't want to pay 5%.
And that's what nobody's talking about. When you look at statistically, the rental rates are climbing faster than the mortgage rates. I mean, rental rates on average climbed 20% this past year. So even if you are paying 4.5% for a home, you have the option of refinancing that home when the rates dip. You can't refinance a rental agreement.
No, it goes up,
and the rate's not going down.
Yeah. And people, have never accumulated wealth by renting for 1 or 2 decades.
No, there was a woman, one of my Facebook friends posted, I don't know this woman personally, but she posted that she's like, the house I've been renting for 20 years, they're putting up for sale.
Yeah, she bought it.
Oh, she bought it. Yeah, absolutely. She bought it. And now they're about to sell it and cash out twice.
Yeah. Well, that's
who's the sucker? And it sucks. Yeah. Go ahead.
Yeah. Would you tell me, as far as you're concerned, and whether it's giving or getting, how key part of your business or the business you're in is referral partners, the agents, the other industry colleagues of yours? How big a role do they play? And I mean, how much of your business is attributable, both giving and getting?
Oh, absolutely. And, so I would say a very large part, I would say about 80% of my business is based on referral partners. And, my goal is to help people build their business. Like, what can I do to help improve your world? In the words of Zig Ziglar, when you help enough people get what they want, you'll have more than enough.
Mhm.
And that is genuinely my goal. Like, I want to see other people win, because when you win, I win. And you can call me selfish because I like to win, but I don't win unless you win. So
Sure.
once again, it's a team effort. And, as long as we all are the best at what we do, we're all going to be successful. And I like to surround myself with people that are the best at what they do. So, the ideal agent that I really love working with is that agent that is doing, 2-3 deals a month, or even possibly one deal a month, at least 1 or 2 deals a month. And they're closing, 20 to 40 homes a year. For me, that's a sweet spot, because I'm able to serve that client at a higher level and really help them level up their game and help them
Mhm.
create more business that they may not have had prior to working with
Yeah.
me.
I mean, a transaction overall, even on one side, it's collaborative. And even between the buyer and the seller, it's cooperative. You're not in a fight. It's not a lawsuit. It's not a battle.
Absolutely.
We're all trying to get to the same line. But I'll tell you, because everyone plays a different position, it's been my experience that working with referrals is fantastic. I believe, however, that more could be done, especially in this digital age we're in. We're all on social media. And if you are able to reach more people and benefit more people through strangers, to really meet who you should know through a social media, or like PlugIntro, a local business media channel, I think the key is to offer as many benefits to people that you think can assist you or others without keeping score. The real important thing is to put people in a position to gain, especially digitally. If you had to buy everyone a steak dinner, you're limited by the time and the space and the money involved. Where in
Yep.
this case, we're walking around with the most valuable business tool ever. We have our contacts, we have our potential opportunities for others all on our hand. And I'm a big proponent of business meetings and conferences, and I love people, so I'll go. But between the winters in the Northeast and COVID itself, you really had to turn to your screen at off hours to build some meaningful connections. But I think that it's imperative that you don't come off as asking or chasing. I think the point is you have to really offer value. And when people say they offer value, I don't think that includes doing a good job in your position. I think it's
Well,
going
it's a
above that.
given. I mean,
That's a given,
when you
right? Because who's
absolutely.
doing a bad job? I think you have to really offer something to be competitive and to gain an advantage more than what others do. And that's really PlugIntro. And I commend you for taking the chance to create these videos. And important for the viewers to know is these videos and this position within a local business platform is available to anyone who wishes to claim that position, be the exclusive provider of their services, to be aligned with you and any agent you work with. Ideally, this should be fun.
Yeah, absolutely. My goal is to help agents let's be honest, my goal is to help agents make more money and help more people. And, I believe in the law of reciprocity. So, the more I help you, and the more success you see from the help that I'm bringing you, the more you're going to want to help me.
Sure.
And I like to think that I lead by example in that. And I probably spend more time with people that I shouldn't. Uh, but once again, it's a matter of, I want to help somebody and bring them, bring them some tools or knowledge that maybe they didn't have, that they can go help generate some leads and
Sure.
help families buy houses that otherwise may not have
Right.
bought
I
before.
mean, you've cut out a lot. You're not driving as much. You're not wasting as much time with redundancies. So, I mean, the next, I was reading that the next phase of the internet is, they call it Web 3.0. And the Web
Yes.
3.0 is trust and community, where when you're inviting someone to be part of something that is positive, then you're participating in, you're complimenting them. You're offering them a chance to be included. You're thinking highly enough of them. And that's a sense of community. And if there's an opportunity to, as you say, utilize the law of reciprocity, and I believe strongly in the power of loose connections, where you never know who we can meet together. I'm sure we have mutual Facebook friends. And from this platform, your local members and the agents that you include will have many, many mutual friends. And listen, there's trust based on familiarity and performance. So I think we're in a great position by participating in a platform such as this, or at the very least, being considerate of others' needs and seeing how they can positively affect their next situation and their income.
Yeah, absolutely. And for me, I've always generally worked at home. And so as we moved into the whole COVID thing, I was probably a little bit ahead of the ball, not on purpose, but vicariously just by the way that I work. I was ahead of the ball there. So this transition has really helped me really fine tune the systems and how I do things. And so I'm able to offer a high level of service than maybe I was previously, just because I've had the time and the experience to figure some of the systems out.
Right.
And once again, that's where I can help agents, that are struggling a little bit, possibly, work some of their systems out. Because listen, at this, I think that the day and age we're in now, the sales call has definitely kicked up. I mean, my phone rings very regularly throughout the day of somebody trying to sell me something. And so I think as people who provide a service, we need to up our game and approach the client in a different way that nobody else is approaching them, and giving them something that nobody else is giving them. And this is a great example of how.
And I mean, I'm glad you said that. A real point now. I mean, especially for lenders in the real estate community, this is a point that I really push. If you look at the Super Bowl ad for Rocket, they spent $30 million on that commercial for a minute. All the venture capital, all the technology is pushing from direct consumer to lender, or consumer to car, or consumer to realtor through Zillow, or
Absolutely.
open offers, or the buy in place. Everyone is attacking the notion and the principle of relationship marketing. All the money and the technology are going against that. It's important to utilize what we have within our control. Social media, if done correctly, a local business development platform such as PlugIntro has to stay in touch with what's going on. Everything is cloud-based. Everything is on demand. You're checking out Netflix, Amazon. These are what you want when you want it. You've been shopping for food online. So that's we're in this place where relationships have to be paramount.
Definitely. And I think when you boil it down to what it really comes to, is that, the Rockets of the world, you're a number to them. You're a stock price to them. And they're not concerned that if you win or not. If it doesn't happen, it doesn't happen. I mean, I would almost bet you dollars to donuts that they're not calling the listing agent to fight for you.
No, listen, Rick, there's no question about that. The problem is, because you're in this with some experience, the millennial consumers are not. This could be their first rodeo, and they want to press buttons on the phone, and they don't want to hear a sales call. They've been conditioned. They're afraid of any kind of position like that. So since we all are, you say you avoid the phone calls, sales calls, there has to be a way to attract business without stress, without fear, without the chase, without rejection. It has to be something where you're offering a value, an oasis, a benefit to those members, where people are comfortable speaking to you and want to speak to you.
Well, and that goes back to meeting the client where they are. And, and I have so many. Everybody wants a different way of communication. Some people want to talk on the phone. Most people want to text. Some people want to, Facebook Messenger. Everybody's got their way. And I think that you generally have to meet people where they are, and not funnel everybody to this one place that they don't want to be. And so, but once again, I feel like you need to bring them value and help educate the consumer, because an educated consumer makes an educated decision. And if you've positioned yourself correctly, you will be that decision. And helping the clients understand, like, retail lending has done such a great job at marketing and just barraging the borrower with all the, I'm going to go as far as to say propaganda. And the client and the borrower just doesn't understand that there's another option.
Of course. Well, they
we,
don't do this weekly, so they
yeah,
believe the hype.
absolutely.
And
You
you
don't
know
know
what?
what you don't know.
And it's also in line with everything else the consumer is doing now. I mean, your phone has apps.
Yep.
Your, anything. Look what between COVID and Amazon, it became a way of life.
Yep.
So that's really the
Absolutely.
battle. But listen, I mean, I'm impressed with what you've done professionally. I'm impressed with the respect you have for referral partners and the exchange of value and concern for each other's well-being. And keep in mind, so Rick Carlson is here on PlugIntro. Be ready for when he invites you to hear this message and to participate, promote your business, claim one of these videos for your own. And we're here all year, so look for big things.
Absolutely. Thank you so much for having me. I really have enjoyed it. And hey, let's go help some people.
Let's get some things done which benefits others. Thank you. Take care.
Beautiful. Thank you.
Bye now.